Hello everyone. Welcome back to Equity Masters Stock Market Wrap-Up. A very warm welcome to all of you. This is Rini. What an eventful week it was. I know it would be a challenge keeping up with the news. But guys, don't worry. In this week's podcast, I am going to talk about all of it. Urjit Patel's departure, the impact of his resignation on the markets, and all you need to know about new appointee Shaktikanta will be the key topics of discussion. And what's more, research analyst Girish Shetty will join us to discuss about this in more detail. We will also be talking about other topics concerning you and your wealth creation journey. So let's begin with an overview of key topics I'll cover today. Urjit Patel is out. Shaktikanta in as the new RBI governor. Widening of India's current account deficit. India's industrial production and retail price inflation data. Vijay Mallya's extradition and recovery of loans. And key global stock market drivers. First, let's have a quick look at the broader cues. The stock markets were volatile in the week gone by. After an initial sell-off, markets swung back up to post-surprise recovery. The Sensex had plunged over 700 points on Monday. However, the markets staged a strong pullback in the next 3 trading sessions. So why did these wild swings happen? In the beginning of the week, while the market participants were already expecting a volatile day ahead of assembly election results, there came even a big shocker. I'll come to the elections a bit later. First, let's talk about the big news I was talking about. On Monday, Urjit Patel resigned from his post of RBI governor. As expected, the resignation comes in the wake of a strained relationship between the RBI and government over the issue of autonomy of the RBI, among other things. Then, Tuesday saw the government appoint Shaktikanta as the new governor of the RBI. If you recall, he is the key man behind the planning and execution of demonetization. Das was also behind rolling out of GST. Now, owing to these developments, shares of banking and non-banking financial companies witnessed a sharp rally on expectations that the new RBI governor would announce steps to ease liquidity. We will be discussing more about this with our research analyst Girish later. Now, the obvious impact of these events would be on our currency also. The rupee staged a late rebound after plunging 110 paise on Tuesday, but still ended 53 paise lower against the US dollar. The domestic currency pared some losses by the end of the week. Now, Urjit Patel's resignation coincided with the state election results. As you all must be aware, the Congress was able to make significant gain in this round of assembly elections. Congress party won in 3 states, Chhattisgarh, Rajasthan and Madhya Pradesh. It however lost to the Mizo National Front in Mizoram. On Thursday, India's current account deficit data for the September quarter was released. India's CAD stood at 2.9% of GDP during July-September quarter. It is much higher than second quarter of the previous 1.1% of GDP. The CAD number should not come as a surprise given the rising trend in crude oil prices seen during the quarter. One event lost amongst all this chaos was the small matter of Vijay Mallya's extradition. The UK court ordered the extradition of Vijay Mallya to India from UK. If this happens, banks can finally see recoveries of loans amounting to around 90 billion rupees. The week also presented us with India's key macroeconomic data. 2 key indicators of macroeconomy, India's industrial production and retail price inflation improved their performance in October and November, respectively. Industrial activity grew at an 11-month high of 8.1% in October, while the retail inflation rate fell to a 17-month low of 2.33% in November. with inflation consistently undershooting the Monetary Policy Committee's target, it increases the likelihood of a change in policy stance from calibrated tightening to neutral. This could serve as a precursor to a rate cut. Now moving on to the news from international financial markets. As per the news reports, the US and China have begun talks to sort out their trade differences. In particular, they have begun to identify steps that address the concerns of Donald Trump on intellectual property and reduce the balance of trade. This news led to optimism in global financial as well as domestic stock markets. Meanwhile, British Prime Minister Theresa May on Wednesday survived no confidence vote by her own MPs, but lost the support of 1/3 of her colleagues, a sign of the battle she still faces to get her Brexit deal through the British Parliament. Guys, it has been a wild ride for the Indian stock market this year. Understandably, investors are worried a lot. There is enough bad news going around to keep you on your toes. And now, whatever is happening between RBI and the government has brought a lot of confusion among the investors. To give a sense of what's exactly going on, we have Girish Shetty back with us on our podcast. Girish is a research analyst for Value Pro as well as Hidden Treasure and Phase 1 Alert. These are the premium services of Equity Master. Hi Girish, it's a pleasure to have you once again on our podcast.
Hi Rini, thank you for having me here.
So Girish, I was talking to my listeners about the recent events concerning the RBI and the government. With the appointment of the new governor, the market expects tight liquidity conditions to ease. So what is your view on this?
Okay, so from the rise in the indices that we've seen in the past few days, that certainly seems to be the perception. But it is important to note that these are short-term reactions. Ultimately, it will depend on the fundamentals of the business that you choose to invest in and how that business performs in the long term. So for sure, short-term pessimism will be there and that will give you an entry point in good quality stocks. But ultimately, what will matter is the business fundamental of the stock.
Right, that makes sense. So what do you think? For how long will this go on?
So, you can expect volatility in the markets till elections. But as I said earlier, predicting short-term market movements almost never works. It's like the evolution story. Around 65 million years ago, when a comet or asteroid struck Earth from space, it wiped out most species from the face of the Earth. Now, even dinosaurs, which ruled Earth for millions of years, were no match to this heat which was generated from the impact of the asteroid. But mammals, of which we humans are a part, managed to survive due to their adaptability. Now, similarly, in the stock markets, you will have companies which are like these dinosaurs, which won't be able to survive adverse events. And these adverse events keep happening every now and then.
Wow, that's interesting. So are there any stocks or sectors looking like dinosaurs currently?
So one sector which is increasingly looking like a dinosaur is India's oil and gas sector. India's crude oil production was lower by 4.2% in September 2018 as compared to last year. Now the worrying factor is this was the lowest production this year. Now, low domestic production as compared to the demand for crude oil places a huge burden on India's import bill. Rising crude oil prices could have severe implications. Rising inflation, rising interest rates, pressure on the government to cut excise duty, thereby impacting its revenues. We have seen some of this play out already. Now with elections around the corner, you can expect a lot of subsidies on fuel prices. This will further impact the profitability of these oil and gas companies.
Right, absolutely. So that was a piece of advice from our research analyst Girish Shetty. I hope you found it useful. Thank you, Girish. Now you can follow Girish Shetty's recommendation by just logging on to equitymaster.com/valuepro. Well, that's all from us today. So now before I sign off, I would like to know whether you like our podcast. Is there anything specific that you would want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.